Michael here, about 11:15 a.m., 9/19/2024, and well, I have this picture here of a conference room, and I just wanted to do a little, try to keep this short. I could talk probably for hours about the mortgage business in the past, but I'm going to bring you to 2007, in particular, July 30th. And the reason that there's a conference room there is, well, the company I worked for at the time, we had a morning meeting on July 30th. And that meeting was just before the mortgage panic of 2007 began. 2 weeks before that, about 2 weeks before that office meeting, I had noticed Lehman Brothers and Merrill Lynch, and they were being questioned about the valuation of their mortgage-backed securities. That the actual valuation of the underlying asset may not be worth what the bonds were being sold for. When I saw that, I knew. I said, "Here it comes, baby. This is it." Because once I had a money and banking professor, Donald Buck, PhD from the Wharton School of Economics. And I could still remember because now and then he would raise his hand and slam his book on the desk to wake a few sleepy students up. And I could still remember, banking is confidence. Boom! So what happened in 2007 there was banking was no longer confident in providing credit line loans, warehouse loans, to mortgage lenders that would fund loans, originate loans, close them, and use borrowed funds to finance the transaction. They would put it up, they would warehouse it, and then they would sell, groups of their mortgages, the actual servicing, the collecting of payments and taxes and insurance, and even the ownership of the actual note. So that's how businesses in the mortgage business that weren't direct lenders, that's how they would make money. Originating, if they weren't a broker, if they could present themselves as a lender, and they were, but they weren't in the business of warehousing their paper and servicing their paper. So that's the kind of company I was with, um, and they didn't service at all. They were a small company, obviously, compared to a company like American Home Mortgage. That was I don't know, maybe 22nd in the top 25. They weren't the biggest, but they were big enough to rate. Okay, and American Home literally had their line pulled. And that occurred on July 31st, the day after our meeting in the conference room. And I can remember quite clearly Steve, the president, managing partner, and there was about 15, 20 of us in the room, and we were sitting around, and some people were sitting on chairs on the outside, a few people. So it was about 15, 20 people in a conference room. He was in the front, and he asked a question. He goes, "Did anyone read any good sales motivation materials or any good, motivational books?" And I raised my hand. Nobody else raised their hand, but I raised my hand and I said, "I just got done reading Manias, Panics, and Crashes by Charles Kindleberger." Steve's mouth dropped. He really did. It was like, huh. And he took it as a joke, but he knew it wasn't a joke. He kind of laughed it off, but it wasn't a joke. He knew it. So what happens? The day after comes the announcement from American Home. Now, when you try to find the exact day that the panic began in 2007, late July going into early August, you can't find it. But I'm telling you, that was the linchpin. Now, of course, there were things that led up to it. Uh, the Merrill Lynch Lehman Brothers, that was like, when I saw that, I said, this is it. You cannot question the value of assets and not have a problem in the banking world. So And banking is confidence. They had their line pulled. And then, of course, other companies followed. And entire pipelines fell out. And it just created a shock. And I remember in our company, um, they lost probably 75 to 80% of their employees within 6 months. Immediately, a lot of people got killed off. They really did. I still remember a young guy on August 3rd, because that's when the panic really, that would be Thursday, August 3rd, 2007, was really picking up now. From that July 31st announcement by American Home, by August 3rd, tire pipelines fell out. And I remember a young guy taking his cell phone and throwing it down like a baseball down the hallway. We had a pretty long hallway. Matter of fact, we had moved to that office maybe about a year earlier, a year and a half earlier, and it was like a bowling alley. It was so long. Okay, so that's and I remember Steve after when things really got going and the collapse occurred. The panic was really in full motion. Actually, not the collapse, but it was a panic more so. 2008 was more of the collapse. Being in his office, I said, Steve, I said, this is about a hostile corporate takeover at the end of the day. And at the end of the day, it's got serious spiritual implications. So that was the last conversation I had with Steve regarding, obviously, this. That was the end of the company. Basically, from that point, they struggled on, but they didn't see it coming. They were you're making money, everything's going good, you're positive, you want to just drive your business, but nobody's actually looking at, wait a minute, we could get torpedoed over here. And even if you brought that up, if you try to bring things up to people, they just think, oh yeah, they laugh, because, like the mortgage, not the mortgage, but what do you call it? Bank of International Settlements, with all their default swaps and everything else. They had at that time, I think they had a couple quadrillion in derivatives. That's it, derivatives. And I remember going to the controller of the company and saying, look at this. I go, this is a problem. And he just laughed it off because, and it was just kind of like, oh, okay, because he's making money. It's just, that's a negative thing. Who cares? It's Bank of International. What does it matter? Okay, derivatives. They didn't see it coming. They really didn't. They got broadsided. And then 15 months later, they just closed down willy-nilly like a fly-by-night. I couldn't believe it. No forwarding phone numbers, no forwarding internet site gone. Nobody could find you. You're tied in with somebody for 13 years, 12, 13 years, and you're an associate. That firm is literally, you're married, and all of a sudden that firm is gone. You're literally married to the firm, okay? In essence, I mean, as far as the market's concerned, you've been there so long. So what do? They shut down. They moved to a different location. And obviously a lot smaller and a lot cheaper. And they opened up as a new company. And the name sounded very close and similar to a company that had been in business 20 years in the same town that they moved to. Okay? So everybody's calling that company. No phone set up yet for the new company. People had to use cell phones for a couple months. And I mean, and I remember I was like, I'm not going to be on a cell phone all day. You could forget that. But anyways, that's my story about the mortgage panic. And I dare you, go try to find the date. I just tried to find the date the mortgage panic started. When did it start? What caused it to all? What was the linchpin? Good luck. I spent a half hour. I'm like, I can't get a date when this started. So I had to literally look at my calendar, go all the way back to 2007, and I say, okay, the meeting took on a Monday. All right, July 30th was most likely it. Then I had to find some article somewhere that actually gave a date with that date. To find the actual date, July 31st. Wasn't an easy date to find because I needed to confirm it so I had my Monday morning meeting straight. That's from a veteran mortgage person who went through an awful lot in that business from 1985 until 2008. 2009, that was my last year, but I really wasn't working the business, and it was like pointless. So I was doing something else, and I quit in 2009. Matter of fact, it was on 9/11, believe it or not, 2009, that I actually cleared my desk off. I hadn't been in the office for like 4 or 5 months. And, you know, I literally got some of my stuff and left and gave and said, I'm done. Well, I hope you enjoyed the story. I know I probably rambled too much, but that's how it went in 2007. It was a it was the beginning of the end there that led up to 2008. And now, well, good luck. You're going to need it. Believe me, you're going to need it.